You're deeply invested in tech. Would you place any bearish bets or any type of investments betting against Nvidia right now?
No, and I am not exactly an Nvidia bull, but the reality is that treating one of the biggest, most valuable companies in the world right now, like it's any other kind of meme stock, I think is dangerous. That it's Nvidia is such an interesting name right now because on one hand, you have names like QQQ, those ETFs that are having to buy a ton of it, sort of because of their rule-based indexes, and you also have a name that's held almost 80% by retail investors. And so unless you see a huge U-turn by that retail investor who we know is not always super logical, I think that it's really, really scary right now to bet against that name, especially after the split when you see the price and you think, hey, that's cheap. And no, it's just divided by 10. But it still feels, I think, for the retail investor cheap right now.
I know you say it's not a meme stock, but it does have large retail ownership. I know it's something that you're also watching when it comes to Nvidia. I just want to go to the tech trade in general. Any concerns from you that this might just be a bubble similar to what we saw during the dot-com bubble back in 99, 2000? SocGen out with a note yesterday basically saying that the S&P, it could go all the way up to 66, 66, but that would be with high concentration. There's also some other setups there, but they also say it could also swing down to around 4,000. Are you worried about that kind of volatility in the second half of the year?
Look, for people like me who were in elementary school the last time that happened, the reality is that was a very different kind of bubble. You had companies that were literally just spreadsheets, right? Or a hand sock puppet that were commanding these sky-high valuations. These are, for the most part, real companies, right? Even Tesla. I love to beat up on Tesla. They have real cars on the road that are usually safe. So the reality is this isn't 99. This certainly is not 99. Now, is this something where it could look a little bit more like 2008 in the financial sector, not necessarily all the knock-on impacts, but the financial sector where you say those were real banks and, they were kind of over leveraged and they couldn't sort of get out, from over their skis. I think maybe something more like that. But the reality is that the next crisis almost never looks like the last crisis. Okay. And while I do think the names are frothy, I don't think it's a repeat.
All right, so you're like many other people. You're rotating a bit out of the tech trade right now. You're looking for other areas. You're going to have to explain this thesis to me. You like LVMH and Chanel, but you like them because of the French elections that have created so much volatility in the European markets. Make this one make sense, Sarah, because the French elections are rattling every other investor but you.
I think that after living through the U.S. elections the last couple of cycles, you get used to it. The reality is that I think that there's some weakness in the French market right now because of the uncertainty around the election. But the reality is, for these huge luxury brands, it's not just about France. France is not their biggest market. That's where they get their heritage from. It's where their leadership is from. But from a lot of them, for a long time now, the biggest markets have been the U.S. They've been looking into places like Asia, even, the Russian consumer, the Middle East consumer. So they are not tied to the fate of France. And so I think it's an interesting potential time to buy some of that weakness. And then the other reality with LVMH is, there's rumors that they might be interested in taking over Richemont. Those kinds of moves, if they feel they can get them through regulatory control, which if the French election goes in a way that the EU doesn't have as much control or they're not listening to them as much, it certainly could be something they try for, then I think that you have an even bigger conglomerate that has a ton of economies of scale. They're buying the same leather. They're working with the same craftspeople. And so I think it's something that you don't want to overlook, particularly when we are just about to be in European summer and the American tourist is going to be buying.